Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Mark Marex, Director of Index Research and Development with Nasdaq Investment Intelligence, to discuss Nasdaq-100 technicals with the index outperforming so far for the month of March. And that's kind of the understatement so far for this month, Mark, for sure. So let's take a look at your first chart here with the relative strength index.
Yeah, sure. Thanks, Jill. Last time we did this check-in was just about a month ago, prior to the financial crisis, kind of mini banking crisis that has gotten going here in the US and even internationally. And we were already looking at pretty nice year-to-date outperformance of the Nasdaq-100 versus the S&P 500. As of today, we are close to 13 percentage points of outperformance year-to-date, up over 16%. So it's been really just kind of turbocharging even the trend that started earlier this year, with large cap tech and tech growth more generally kind of being looked at as maybe more of a defensive play all of a sudden now that we've got kind of tensions in the financial space. So in any case, back to relative strength, what I've circled here is, few episodes over the past 5 years where we've jumped over 70. That's typically your boundary of overly bullish sentiment. And then your red line is at the 30 line. That's sort of overly bearish. You can see we briefly popped above 70 at the beginning of February this year, but recently with this strength, there have been some, down days mixed in with the good up days. But even the down days, there's been a lot of outperformance versus S&P 500 and even the Dow Jones, given, again, by design, no financials exposure in this index. A lot of that upward pressure on rates starting to come back down. That, of course, has been, the Achilles heel for this index over the past year or so. And this year turning into a real tailwind, as you're seeing rates really across the yield complex come down, given these strains in the financial sector.
And what if we look at performance relative to the short and long-term moving averages?
Yeah, so again, here, what we're pointing out is the 20-day versus the 50-day moving averages. You could see already this year, we've gotten the 20-day to jump back over the 50-day and kind of stay there. That means you're kind of in this stronger of a shorter trend uptrend. And then you've got, one clear, to me, example of where we tested support of the 50-day. We kind of blew under the 20-day, but then found support at the 50-day a couple of weeks ago, bounced right off of that. There's been a few times over the past year and a half or so with this bear market where we've not found that support at the 50-day. So that's a change from what we're seeing year to date. That makes me a little bit more optimistic in terms of holding that as a support level as we go forward here.
And how about longer term?
Yeah, I mean, same thing, right? If you look at the last couple of examples that I circled here, since beginning of 2022, we've dropped under either one or both of these, and found resistance on the upside from these, right? Meaning we've been below, we haven't been able to kind of firmly jump above. We found resistance from both the 200-day and the 100-day in the past. Look at what's happened this year, right? The circle all the way on your right, we jumped above the 100-day early in the year, then we jumped above the 200-day, and then we bounced off of the 200-day a couple weeks ago, and are now firmly back above that. And it looks like the 100-day is about to cross over the 200-day to the upside. So that, to me, again, continuing the short-term story means long-term, maybe we have a little bit more technical support as well in terms of reestablishing some kind of an uptrend here and reestablishing some of those, resistance to the downside right around that 12,000 level.
And finally here, let's take a look at the options market. What does it indicate?
Yeah, so on the left-hand side, this is broad US equity market, right? So all US listed names, put call ratio going back about 7 years and change. And what I highlighted is really just the massive spike that we had at the end of the year, right? That spike where we got to about 1.5 puts for every call on US equities. That was well above what we saw in the midst of the COVID crisis in March 2020, which was the only other time we jumped up above a ratio of 1 here. And that just tells you that the positioning, I think, going into this year was extremely cautious. Folks were not anticipating this big of a rebound, certainly not within the tech space. And since then, positioning is really kind of settled down where we're back sort of to this long trend line that I drew, that dashed line that's kind of downward sloping. We're back to right around the 0.6 level. So neither overly bearish nor overly bullish in terms of the options positioning. On the right-hand side, you see the vol-Q, that's the volatility index for the Nasdaq-100. And, obviously volatility this month overall for things like the S&P has spiked up because of that exposure to financials, because of the tensions in the financial sector, not here in the NDX. We're continuing to bounce around levels in the kind of low to mid 20s, not even really testing the 30 line, and what I circled a couple times and drew that horizontal purple line across. That's the level of 40 that we've tested a few times since COVID came on the scene in 2020. So those are the levels I would look for there for really kind of a sign that things are starting to pick back up in terms of volatility for the Nasdaq-100. Right now, we're looking pretty good relative to recent history.
All right. Appreciate the insight as always, Mark. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.